Welcome everyone to the Kendall Report, where I share my 40 years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, in yesterday's action, we continued to see the upward trek as both the NASDAQ and the S&P were able to render new all-time highs, market driven higher by the usual suspects, all the large cap tech stocks. As we go forward this week, we are now just one day away from Mr. Powell talking to us. We're going to see continued posturing on monetary stimulus. And then on Friday, we'll see the joint statement from the virtual symposium. This will represent what I believe to be the beginning of a coordinated effort of all the central banks on the planet to add monetary stimulus. My expectation after the monetary events that are likely to be announced this week, we will see fiscal stimulus come in over the next several weeks. So this coordinated effort by both monetary and fiscal or governments are going to start to emerge across the planet, not just here in the U.S. This is an important strategy that they're executing. There's going to be plenty of expectations built into the market as we come into Thursday and Friday. As we look back at yesterday, one of the reports that came out was the Conference Board report. It's not a material report, but we did see a softening start to happen. And I've been telling you, as we go into mid-September, we're going to start seeing reports that are mixed, some good, some bad, and might be some surprises in there that are more negative than positive as we go forward. The reports that come out are going to reflect a better viewpoint of what's really going on in the economy. The next event will be what capacity can we get the economy back at? I still expect we're probably running somewhere between 50 and 65% of capacity right now. There's a lot more that can be added. From an economic viewpoint, we're going to start to see a different picture. That doesn't mean it will be negative necessarily to the sentiment, but it depends on what these metrics look like as they come out. So it's a little early to make that call. One of the things that we've already seen this week, the strong move that we've seen on a weekly basis, we're reaching some of the key resistance numbers already. And here we are midweek, we're printing up toward the S3 number on the weekly chart. I will go through plenty of details in the technical section today. It is going to be a little more brief tonight because remember, we have on Wednesday roughly a 2.5-hour live cast that I will be able to go into a lot of details, not only going into in depth on the equity markets, but going into a lot of other secondary markets and individual stocks as well. So make sure you join us for that. That's always a really interesting event. There will be a rebroadcast once that is completed. One of the other aspects that I've been talking about is the housing market expansion that we're seeing. And once again, we saw housing starts up 13%, and we also saw the Case-Shiller price index come in at a plus 3.5%. So this is reflecting the exact metrics that I've been discussing with you over the past couple of weeks about this massive expansion in building that's going on in this country. If we look back on March, it appeared that it was going to be the opposite. I actually did a podcast talking about banking crisis 2.0 and talking about all the things that were likely to happen in real estate. Well, that didn't happen because we had the huge Fed stimulus come in and they added trillions of dollars in the marketplace. We're flooded with cash right now. They're supporting a lot of these programs on a daily basis using the QE program that they put in place all the way back in March. This program is going to be continuing, and as I mentioned just a few minutes ago, we will hear from Powell on Thursday and then again on Friday on what these coordinated efforts are going to look like going forward. I'm not sure they're going to reveal a lot of information on what's going to happen, but they will certainly give us a core viewpoint, because looking back on the Fed's activities, going back to Bernanke and then the Yellen era, we always had this transparency. This has been a big thing for them to make sure that they don't scare or surprise anybody. There hasn't been any shock and awe type program like Greenspan and Volcker used back in the day. So we're continuing to see lots of transparency. They want everyone to know what's going on, and that's what we're likely to see as we come into Powell speaking on Thursday and Friday. As far as the balance of the week goes, we're likely to see some interesting configuration over the next several days, and a lot of it is on this Apple split and the Tesla stock splits. A lot of hype has been around these events, And it's very possible that this could set up a short-term high, not a major high. We're still going to move higher into the resistance numbers, it appears, but there is going to be a point here that we stalled. We've already moved 100 points on the S&P in the last 7 or 8 sessions. At some point, we're going to see this stall, as I've discussed in our database, that the intermediate trends are continuing to evolve. So we've got a long ways to go before we'll see a major top in the market. Let's go ahead and dig into the charts, see what they're telling us for Wednesday. Remember to come to the live stream at 1:30 p.m. Eastern Time on Wednesday. Reviewing the WaveTech database, as we look at the output today, it was very neutral. There's not a lot to talk about here. We've seen some stabilization in spite of the new high close in the S&P yesterday. We saw just a rotation going on in the short-term database with approximately 340 new buys and a slightly larger amount of exits, but basically a neutral rotation for today. Now, I don't know if we're going to see this database continue to expand. I talked about this yesterday. We remain under that magical number of 68% on the short-term database. My expectations have been that we would see a liquidation in the short-term database, possibly down to a 40% range. Now, that still may happen, but it doesn't necessarily mean there's going to be a large correction. It looked like last week that we were going to get a reasonable correction to come out, but that was all negated in last Thursday's reversal pattern that occurred. And here we are trading between 60 and 80 handles higher on the S&P already. But the database itself is not really lending a lot of clues as far as what we're likely to see going forward here, as we're going to have to continue to watch it very closely as the market action unfolds for the balance of this week. As we review the S&P cash market, we're seeing a contraction again of that daily range. We're back to around 18 handles again. Has been typical. We've seen a lot of volatility from the standpoint of the contraction and expansion in the daily ranges over the last several sessions. So this is continuing, and we're now seeing a contraction again, which does suggest we have some minor risk coming into the markets, meaning that we may trade down to an S1 or S2 in the pattern, but it doesn't mean there's a big rollover coming here at this time. The upward slope in the markets are very positive. We have a PPM 1 at 0.33, 0.29, and 0.30. So we're firmly in an uptrend, and any type of action we're likely to see at the moment will be normal. And as I mentioned in the opening comments, overall the sentiment is likely to stay bullish, especially coming into Powell's comments on Thursday and moving into Friday with all the central banks making this statement as we go forward. As we look at the weekly, we see something interesting, and I mentioned this in the opening comments. We've moved up to the R3 number, 3441. Yesterday's high, 3444.21. 3455 is the extreme. I also discussed some numbers last night between 3455 and the 3462 level. This most likely will be the peak of the values for this week. I don't expect to see any big reversals from these levels. Most likely R1 or R2 values, which are 3426 R2 and R1 at 3410, is going to be the support numbers now that we've traded up to the 40 level. I just don't see us getting down below the 3400 level and printing down to an S1 number. Not at the moment. It doesn't appear that that's in the cards. Reviewing the NASDAQ futures, we're up slightly, up 16 handles right now at 11,743. The market grid suggests that there is resistance at the R1 number at 11,768. The high so far has been 11,758, so we've traded up to that range. S1, 11,684. The low is 11,729. I don't think we'll see an S1 print. If we can get above R1, we could see it move toward the 11,814 level, but this market is likely to be somewhat constrained. You'll also notice that the PPM1 is turned down. It's still a very positive 0.54, so there's no chance of a big rollover here, and the major support on a short-term basis right now is 11,447, which is that 10-period moving average. In the weekly grid, the market has not hit R2 yet, 11,772, the high 11,758, so we're up into that range, but we're not quite there. And then the next level is 11,882. So there's a lot of correlation between the daily and the weekly numbers that are coming out at the moment. Probabilities of seeing S1 are just about nil right now. That would be major support at the 11,462 level. There's not a lot to really discuss from these markets right now. So I have the market grid up. Just a second ago, I had the daily market grid, and we have the weekly market grid. So these numbers are going to be important. You may want to mark these down for trading parameters. Remember, we have the live stream tomorrow, so we'll be able to go into a lot more details looking at how the daily, weekly, and monthly correlation is setting up as we come into the end of August. Next market I'll cover is crude oil. I haven't covered this for a little while. We have seen a continued slight upslope of the trend. I've been talking about ultimately getting up to around the $48 to $52 level. We're still moving toward that. This is the weekly graph. We're seeing a very positive PPM1 at 1.06, and the PPM2 and 3 are actually signaling further action to the upside, but the key resistance is 52.96 on the upside. The support now is 43.51. The action that we're likely to see as we go forward over the next several days is really trading down possibly to a high 44.90s. But there's not a lot of activity here, but it is a very stable market and continues to show this upward slope or the upward trend. And this is important. It goes to everything I talked about in opening comments about what is the capacity of the economy going to be. This is going to be a place where we're going to see that first in demand for crude oil. Not everybody's driving a Tesla, remember. And this also will have a lot to do with air travel and come into the final weeks of the summer and just to see how all this is going to play out. This may be another place to watch closely as we come into September to see if demand in oil, how these prices act as we get into the month of September. This trend is very solid, and we're going to continue this upslope, working toward 48 to 52 as a ultimate peak. And that doesn't mean we're going to roll over and collapse. That's just where the targets are right now. The final market we'll cover tonight is gold. I set you folks up real well for gold. I told you watch for that 1919 number to be hit, and that was going to be one of the premium buys. I see a lot of people on the channel telling me it's going to 1800 or so. It's not, okay? This is a premium buy level here, and if it does print down, we're trading 1925, 26 as I'm speaking here, and we're going to see this thing move back toward ultimately the R1 number 1979. It will support here. We could print down a little lower. The 1904 level is an extreme, but this is just a buy zone between 1920 and 1900 is going to be where you want to position in this market. There's not going to be a lot of downside. The extreme here is S2 1878. It could print there, but I don't see that. With the PPM1 at 0.83 and the 10-week moving average at 1903, the probabilities are only 30% for it to trade below that number. So 7 times out of 10, it's going to remain above this level. If you're making a placing a bet, that's exactly how you want to place bets against a high probability that a support number is going to hold. And this is exactly what we're set up on a weekly basis. Reviewing the daily chart, it's in this gradually drifting lower pattern. And for today, 1914 is the S1. I don't even see us getting there. We printed above 1931, traded almost R2, 1941. We get above 41, you should see a move toward the 1951 to 60 and ultimately heading toward that 1979 number, which is a R1 number on the weekly grid. We're going to watch this market trade within these parameters for right now. I don't see it exploding from here, but I talked about some major upside numbers that are starting to evolve, and these numbers aren't going to be hit overnight, but it's setting up for that next move to the upside. This will complete the video for tonight. I want to thank you all for watching, and remember to come to the live cast tomorrow at 1:30 New York time. See you then.